Friends, when can you call a financial information to be presented faithfully? Faithful representation. It is the third limb of the qualitative characteristics of a useful financial information. Okay, so when can you call a financial information to be faithfully represented? Okay, now in order to call a particular financial information to be faithfully represented, it should have three characteristics. The one is it should be complete. The financial information should be complete. Then it should be neutral, and third one, it should be free from errors. Free from errors. So one is complete. A financial information is faithfully represented if it is complete. So you have to provide all the relevant informations. You cannot give it in piecemeal. It has to be complete. Now next, it has to be neutral. It should not be biased. You should give a neutral financial information. And the third from free from errors. If it has got some material errors, then again you cannot call it as faithfully represented. Now these are the three limbs or characteristics to call a particular information to be faithfully represented. Now here comes another concept called substance over form. Okay, substance over form. So according to the concept of substance over form, it is not just sufficient that you disclose the legal form of a particular financial information. You should also faithfully represent, or you should also represent the substance of that particular transaction. Okay, say for example, if there is an information, okay, let's take it as an example of a convertible debenture. Convertible debenture. Okay, generally a debenture is an instrument which is generally categorized as a debt instrument. We call it as a debt instrument. Any debenture is a debt instrument. Okay, so suppose there is a company and this company has issued debentures worth 100 crore rupees. What will you do? You will disclose this 100 crore rupees as debentures under liability. But now suppose this debentures amounting to 100 crores has got a condition states that it shall be mandatorily converted into equity after 3 years. Converted to equity after 3 years. So what does it mean? Right now it is debentures. Right now it is debentures. 100 crore debenture. So is it a liability? Yes, it is a liability. In its form, it is a liability. But you call something as a liability only if you have an obligation to repay it in cash. But do you have an obligation to repay the debentures? No, you don't have an obligation. Why? Because after 3 years, it will mandatorily get converted into equity. So, even though legally or in its legal form it is debentures, can you call it as a liability? Actually, no. Why? Because after 3 years, you don't have an obligation to pay cash or repay. Your obligation is only to convert it into equity. So, even though it is structured or legally it is called as a liability instrument, in its substance, it is an equity instrument. It is an equity instrument. Okay, and not a debt instrument. Now, this is what is given in Ind AS 107 and 109. Any mandatorily convertible debentures is not classified as a liability, rather it is classified as an equity instrument. Now here we are using the principle of substance over form. You are not just looking at the form. If it was only form, then it is a liability because it is called as debentures. And you would have given the debenture certificate also to the holder. But if you go to the substance, it is not a liability because there is no obligation to repay it. So if you go by substance, you have to classify it as an equity instrument. That is substance over form. So if you want to call an information to be faithfully represented, it should be complete, neutral, and it should be free from errors. And also you should give focus to the concept of substance over form. Give importance to the substance of the transaction, not just the form. Friends, I hope that is clear to you. Thank you.